Go to ancient Rome, go to 1789 France, go to 1999, 1990s Yugoslavia, any time on the history map or any part of the calendar, you will see that currencies are getting debased. And that's why I don't, to answer your question, yeah, gold is going to move significantly higher over the next 5 years. Will it move in a straight line? Absolutely not. Could,
Mhm.
but I doubt it. And if there's a sell off in the markets, gold is very sympathetic for the first 90 days because people need to get liquidity and they sell their gold. But the direction of gold is simple. It's not that gold gets stronger, it's fiat money gets weaker. I'll say it over and over again. And it's getting weaker because those debt numbers and data points that we talked about are getting more and more unsustainable.
As global economic uncertainties persist, gold attracts attention from investors and nations alike. Matthew Piepenburg, a prominent financial expert known for his insights on macroeconomics and precious metals, emphasizes gold's long-term potential despite short-term price fluctuations. Piepenburg notes that gold has outperformed the S&P 500 since 2000, highlighting its role as a stable long-term investment. The global shift towards gold is a significant trend emerging, particularly among Middle Eastern countries. This move is increasingly viewed as a departure from the US dollar's dominance as the primary reserve currency. China, too, has shown a renewed appetite for gold purchases after a brief pause in May and June. Despite its bullion holdings remaining low as a share of reserves, ongoing geopolitical tensions are expected to drive China's longer-term strategy to diversify away from US dollar-denominated assets. Piepenburg argues that gold's rising value is not due to inherent strengthening, but rather the weakening of fiat currencies. This weakness, he contends, stems from unsustainable debt levels and continued money printing by central banks. The United States is a prime example of this trend, with debt interest alone projected to exceed $1 trillion, surpassing the country's substantial military budget. Further compounding the issue are the looming fiscal challenges posed by entitlement programs. According to its Board of Trustees, Medicare spending and Social Security face an estimated $78 trillion in unfunded liabilities, with some outside estimates placing this figure even higher. As nations grapple with mounting debts and economic uncertainties, gold's appeal as a safe haven asset and potential alternative to traditional reserve currencies continues to grow. Please tune in for our exploration of Matthew Piepenburg's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Argue gold loves chaos, and we've just seen nothing but chaos for the last few days. And you would think it would go up. And there's others, there's others who would say, look, when there's a crisis, people need liquidity to cover margins, so gold could even sell off a little bit. You look at the ETF outflows in gold and silver. Again, you could make arguments as to why. I look at gold as a long-term play as currency insurance. I've never changed that. Although its optionality as a speculation asset is still there. It's outperformed the S&P since 2000, but you could argue pick your statistical window. But again, the way I look at it, the gold move in the next 10 minutes or the last 3 days isn't as important to me as the next 5 to 10 years. And whether I look at it from currency debasement, whether I look at central bank gold stacking, whether I look at the petrodollar changes, which would take an hour and a half to get into in detail, whether I look at these seismic shifts, whether I look at the exports out of Switzerland into UAE and Saudi Arabia, their biggest export this year where I work out of is gold. These countries are stacking gold because they want to use it as a reserve asset, as a savings asset. They're going to use the US dollar to spend for liquidity. But it's really this seismic shift that we saw in 2022 that even I and Grant Williams said was irrevocable is happening faster than I even expected. And the gold move day to day, hour to hour, week to week, it's an important question if you're speculating in gold. It's not an important question if you're using gold as currency insurance for dying fiat money. And it's not really a concern for any of our clients in 90 countries because they've seen the writing on the wall for years. And again, Egon von Greyerz, my colleague, started buying gold at 300. Everyone laughed at him. Not to say that if you're buying stocks and bonds that you're stupid, if you're speculating, you're stupid. Yes, there's other things you can do. If you're into wealth preservation, gold is so obvious now based on what the world is doing. That hockey puck or polo ball that I say, you go where it's moving, not where it's sitting. It's so clearly the world is moving towards gold as a better reserve tier one asset than an unwanted IOU from the US Treasury. So again, you got to separate the gold bug sensationalism from the simple realpolitik of history and math. The math is what the debt numbers we just talked about are. History confirms every time without exception that currencies, again, go to ancient Rome, go to 1789 France, go to 1999, 1990s Yugoslavia, any time on the history map or any part of the calendar, you will see that currencies are getting debased. And that's why I don't, to answer your question, yeah, gold is going to move significantly higher over the next 5 years. Will it move in a straight line? Absolutely not. Could,
Mhm.
but I doubt it. And if there's a sell-off in the markets, gold is very sympathetic for the first 90 days because people need to get liquidity and they sell their gold. But the direction of gold is simple. It's not that gold gets stronger, it's fiat money gets weaker. I'll say it over and over again. And it's getting weaker because those debt numbers and data points that we talked about are getting more and more unsustainable. And I don't see any way that a politician is going to cut entitlements or cut military in the US. And so it's only going to get worse. It's been interesting because Yellen has been more about dollar debasing openly and cutting rates and finding liquidity than Powell has been. And there's a number of reasons, but even Mohamed El-Erian wrote a letter to the Fed basically saying the same thing. This sanctions is not working. Target inflation at 2% is not working. We have to rethink more clearly the math behind this. It's fascinating that Yellen would agree to that. Why didn't they see that in 2022, in February and March, when they made this decision? And again, we can get into all the pro and con arguments of what Ukraine stands for, what Zelensky stands for, whether that was a good or bad decision. My political views on that are irrelevant. But even if you take an agnostic stance on that, when you weaponize a world reserve currency, you're going to lose trust in that currency. And trust is hard to quantify. Confidence is hard to quantify. Faith is hard to quantify. But again, for Ronnie Sturfula, Grant Williams, Jim Rickards, myself, Luke Gromen, that was a watershed moment. And the things that we've seen since 2022 to today, up 20% of global oil sales in 2023 outside the US dollar, that would have been unthinkable pre-2019, 2018. These things are happening. It's happening so fast, and we're in history right now, so it's hard to see it.
Recent reports from the U.S. Department of Labor indicate a continued decline in inflation, with the Consumer Price Index rising 3% in June compared to a year ago, down from 3.3% in May. This marks a significant drop from the pandemic-era peak of 9.1% in 2022, the highest level since 1981. The Federal Reserve has been closely monitoring these figures to guide its interest rate policy, raising rates to their highest level in 23 years to curb inflationary pressures. However, financial expert Matthew Piepenburg challenges the validity of these official inflation numbers. Piepenburg argues that the real impact of inflation on citizens is substantially higher than reported figures suggest. He contends that when combined with regular taxes and the weakening dollar purchasing power, the actual financial strain on consumers is much more severe. Piepenburg's perspective highlights a growing debate among economists and financial analysts about the accuracy of official inflation measures. Critics argue that the CPI may not fully capture the actual cost of living increases experienced by many Americans, particularly in housing, healthcare, and education. Let's get back to the interview.
90% of the stock market wealth that came post 2008 is in the top 10% of our economic systems. So there's been a massive wealth disparity directly because of Fed policy, because the inflation went into the S&P as well. And so you can't deny that we've made so many mistakes thinking short term to support the markets at the expense of the economy, because the markets and the economy are two very separate things. And Thomas Hoernig reminds that it's the role of a real Fed officer to think about the economy, to think about the long term. What the Fed has done is bail out every dip in the market and every political headache and every fiscal problem from COVID to pre-COVID with money literally mouse-licked out of nowhere. That is inherently destructive to the currency, which is destructive to the purchasing power of the citizens, which is destructive to their political views, their social views, and they're looking for everyone to blame based on gender, based on color, based on social class, based on elite schools or unelite schools. I couldn't imagine anything more silly right now than the division, the tribalism in our country, and it's going to only get worse. Again, Biden or Trump, imagine a scenario where Biden wins. It's possible. What will that do to the base of the Trump support? How will they react? And what will happen if Trump wins? The never Trumpers and the large portion of America who can't imagine Trump, who think of him as the next Mussolini, what's that going to do for our social unrest? What's that going to do for our security? What's that going to do despite all the economic problems? When you add on this invisible tax of inflation, which is completely, as you know from John Williams or even Larry Summers, our inflation number is a classic lie. When you add on the invisible tax of inflation with regular income tax, and the purchasing power of your currency getting weaker and the cost getting higher and the interest rate still too high for too long, you couldn't make up a more perfect storm for social unrest. And so, David, I don't have an easy answer. Like I said, Mother Teresa, Papa Smurf, Santa Claus, and the White House, I don't know who's going to fix this. And I do see what politicians do best, and this is what Hemingway warned, distract the world with wars or blame inflation on an extraneous event. But that is always what happens when political opportunists come in and bankrupt the country. They go from temporary prosperity to the permanent ruin of inflation and war. And for the last many years, what have we seen? Inflation and war, direct or proxy. I'm not making this up. The facts say it. And so it's not an optimistic view. And there are many who are going to be very happy if Trump's elected. I understand that. But again, no matter what you think of Trump's motives or sincerity, I do believe he's a very sincere patriot. I don't disagree with that, but I don't see how he can fix it. And I certainly don't see how Biden can fix it. I think Powell is so trapped. The Fed is so trapped. And Yellen and Powell are basically having mutually exclusive policies that contradict each other. But at some point, we're gonna debase the currency. We're gonna reduce rates to cover our expenses on our debt, and it's just gonna destroy the purchasing power of an already waning U.S. dollar, which is relatively stronger than other currencies. So if I was in Turkey or Argentina, I get it. Fiat versus fiat. I'd rather have dollars than pesos or lira. The problem is the purchasing power of that king dollar just isn't what it used to be 5 years ago, 5 decades ago, 5 minutes ago. And that's just the sad reality. And that's why gold is something I talk about, because that's why Bitcoin is so popular as well. Again, another anti-fiat middle finger asset class. Not here to disparage Bitcoin. Personally prefer gold, but there's no coincidence that both are doing well in a situation, in a backdrop like we're in socially, financially, economically.
As we conclude this exploration of gold's role in the global economy and the challenges facing fiat currencies, how might the increasing interest in gold as a reserve asset impact the international financial system in the coming years? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.